My guest today is Daryl Jobman, and we're talking about various ways of analyzing the markets and how it's changed over the years. So Daryl, you've had a lot of experience, almost 45 years, including some as the editor of Futures Magazine. You've seen a lot of different types of analysis of the markets. What's been your impression over the years of how it's changed?
Well, things have changed over the years because initially all people really had to rely on were fundamentals. And of course, you couldn't get the fundamentals or couldn't get them on the same scale that the commercials could. So you were kind of, as an individual trader, kind of a victim of circumstances, kind of watching. But, according to the technical analysts who are, following their charts, everything that happens, everything that occurs, every possible fundamental, everything known to a market should be included in one thing. That one thing would be price. And price is one thing that can be tracked. It can be tracked on charts, and as you watch it over time, it forms patterns, and as it forms patterns, they have some ability to look ahead. Now, that's as good, well and good, the two approaches, but there is a third thing that has to be considered. That third thing is where you start to recognize that it isn't just one market, it isn't just one chart that you have to follow, but you have to use the markets that influence that market. There's intermarket analysis, a very key part of analysis as the third leg on that three-legged stool. One of the things, when you look at it, at least from an agricultural perspective, which was my background, is that if you have soybeans and corn, and you have a price ratio in there, 2.2, 2.3 to 1. And if it gets outside that price ratio, that is going to influence what farmers plant, how much is produced, has a whole lot of ramifications for the other crop. And so you can see just on a small basis how there's an influence of various markets on the one market. We see it with interest rates and stocks. You see it in so many different areas that it should be an integral part of any individual trader's analysis.
How can an individual trader use market analysis to make better trading decisions?
Well, I think that's part of the thing that you have to start with. There are really three steps in the whole process if you want to boil it down. You have to be a good analyst of some kind. You have to know what's going on with the fundamentals, be aware of the timing of the reports because that's when you have the surprises. So you have to be aware of what has actually happened from an analytical fundamental standpoint. But you also have to know what's happening on the charts, and every trader needs to know that. And you also have to know what's happening on the various other charts that are affecting the market that you are trading. So everything that you decide, kind of leads up to then, okay, when is it time to make a decision? You got your market analysis, then you have to make that timely decision to enter or exit, whatever the case may be, and then you follow that with good money management. Cut your losses when you need to, that kind of thing. And you usually need some kind of help to be able to arrive at that. No matter what kind of analysis you do in making a trading decision, you need tools to help you along.
So the individual trader didn't have access to this really 30 years ago, and when you saw this progression. How has that changed? How has it helped the individual trader compete in a global market with the big commercials and institutions?
Yes, well, obviously everything's global, so everything that happens, we have to be aware of it, from the standpoint as whether we're individuals or commercials or whatever, if you want to compete. And so that if we are trading from an individual standpoint, you do what you can to find out on the fundamentals, and you'll never have the edge there because that's where commercials are going to have it. You look at a chart, you're probably never going to be able to know everything there is to know about a chart because if it's so evident on a chart, a lot of people are going to see it. So you need an edge of some kind, and to get that edge, you need to have some kind of a tool, some kind of a tool where you can use the resources of software.
What kinds of software can help you do this intermarket analysis?
Well, the type of software that I'm talking about primarily is TradeShark. And TradeShark is relatively new software developed by Lou and Lane and their research team. It has several advantages. One, it's based upon intermarket analysis. It goes through a whole neural network process, and what it does is that when you get done, you have intermarket data that you can use to produce some predictive indicators. Rather than look back at price lagging indicators and so forth that look back at price and that's it, you have indicators that actually are able to look a little into the future, and you just need a short-term forecast to give you that edge to get into a position before the trading crowd does. And that's what TradeShark does. Now, the other plus of TradeShark is that I am not a whiz on neural networks. I don't know what's going on with some of this computer stuff. You know, there are a lot smarter people than I am that have figured this all out. But what I do know is that I can use TradeShark. I can, you know, click, get my indicator on a chart, and I don't have to know any of that stuff. But I can apply it to my charts. I can focus on trading. I can focus on analysis, focus on, you know, what I need to know to make a trading decision, and not have to worry about all that other background stuff.
It sounds like the beauty of you can take advantage of all the complexity that's in there, but have an elegant interface and still be able to understand it. And as a trader, even a beginning trader, make trading decisions based with the help that it gives me.
Exactly right. Yeah, if you have some experience trading, you'll pick up some things like that you can apply to a chart, and you don't have to worry about how did you put it all together. You just click, drag and drop an indicator, and there it is, and you have your clues right there.
And you mentioned the grains, but my understanding is that any market, this is very good on.
It would work for any market. It works for stocks, it works for futures, it works for currencies, it works for exchange traded funds, not just US markets, but foreign markets as well. Very versatile tool.
Daryl, thanks for being here.
You're certainly welcome.
You're watching the TraderTube video series.